Hello, hello. Welcome back to the Trading Triangle. Me and Kaye once again. How you doing, Kaye?
I'm
Sunday.
doing great, Sean. How are you doing? Happy Sunday.
Yeah, very good. I'm looking forward to my week because I'm going to Greece on Tuesday. So yeah,
Mm.
just one day of trading and then off to Greece. Looking forward to it.
So that
Obviously.
is a perfect segue to our announcement that we will be taking a break next week from the live. So make sure if you have any requests, drop it in the comment section below. Hi, Sebastian, and let's do this.
I will still be looking at charts though. Don't you worry about that on Greece. I'll still be active on X. Yeah, no, we're just a couple of guys on the internet talking about charts and stocks. So this is not financial advice. We're just having a little bit of fun. And that is what we like to do every week. So we will continue doing it until someone tells us not to, which that would be no one. Obviously, stay tuned to the end for audience requests. You can see that on the screen now. Get your requests in now so we can get them up on the screen for you. Have a look through the charts, give our perspectives, our ideas, etc. So go ahead and stick them on the screen. Right, let's get this slideshow on the road. Oh, I need to go full screen.
Ooh.
This has gone well, isn't it? All right. Last week's performance. Wow, what a week. Okay, I'll let you talk about this.
Well, I mean, there's really nothing to talk. It looks a little better because this is a weekly performance and not like a daily performance. But there was actually funny. There was a meme. So I don't know if who else are following the Olympics or not, but there was this shooter guy from Turkey, and there's probably a lot of memes going around. So they put a meme of him where they replace his head with Jerome Powell, and they put the daily performance of this S&P 500 for Friday, and basically the same. So Jerome Powell is basically shooting down the entire market. Yeah, I mean, there's nothing to say. You can see Amazon. We'll be covering Amazon today. We are not covering NVIDIA, but if you have any requests, drop it down. We'll cover that. I mean, barring the Dow Jones, which is probably the best, I guess. McDonald's surprised. It was up for 9% for the week.
Oh, wow.
Barring that, it's the tech is bleeding right now.
Yeah, I mean, like you said, you didn't really know where to start, did you? So we've got the big guys kind of coming down a bit, bar Meta, of course. But it'll be an interesting week ahead of see if we get a bit of a reaction, if we get a bit more of a further drop. We'll jump into SPY and QQQ in a minute, kind of analyze that. But just looking at the kind of the tech side of things, just looks really rough, doesn't it? Apart from Meta, of course. But yeah, we'll see what happens. Let's have a look what's left. Hello to Bayhan's Plan and Sebastian. Good to see you both. Let's move on to the next slide. So performance from last week, obviously SPY down 2.4%. It's a big number. QQQ down another 3.8%. Another big number. Obviously Diamonds down, and IGBM. We spoke about this just before the stream. 6.56%. That is a big drop. But it's still just above 200, and that's a key level we've been talking about for many months prior to the break above 200. Do you see it going back down below 200k?
Well, I mean, anything can happen, as we saw on Friday that Warren Buffett did sell 13% of his stake from Apple. We don't know how that will impact. But interestingly, if you have been following the channel, we continue to report the put to call ratio every single week, and it was at 0.6, and every single week it's creeping up 0.05. So now we are up to 0.8. Now, can we go to extreme fear? Yes, we can. But what I'm trying to say is that you gotta just keep an eye on the wicks because of the certain volatility that is happening, and also keep an eye on the put to call ratio. And what will change? There was another interesting stat that if it's an election year, August is supposed to be a good month. I don't have that link right now, but I will definitely find the link and I'll post it on my Twitter feed. So definitely check that out. But that we'll see how that plays out. But the start of August doesn't look that pretty right now.
Yeah, but it's a tricky one. I think we did actually dip into extreme fear, during the week. There's a few screenshots around that. I don't know if it was just briefly. So the fear is there. It's definitely sentiment wise. You can feel it the last couple of weeks. Obviously, it's been a bit of a sell off. What I was going to say, the VIX as well. I think it went up for 40% in one day. So that's a big spike, especially after the spikes just before that as well. So yeah, a natural reversion to the mean kind of generally happens, but of course, when that happens is to be decided. So I mean, plenty to look forward to this week. Plenty more volatility, and that's what we like as traders, isn't it, Kaye?
Exactly. And if you look at the data on the right hand side, 1 month ago, we were in the same spot in the fear category, and we are still in the same spot in the fear category. So not much has changed within the last month or so.
Exactly. Moving on, we've got lots of earnings this week. I'm gutted to say I won't be covering Rivian on my channel like I have done for the last 4 quarters. It'd be interesting to see what they do, obviously, this quarter, or last quarter, should I say, because I'll be obviously in Greece, as I mentioned before. So that's just there on the Tuesday evening. So much on this table. I think we'll start just go day by day, shall we? So on
Yeah.
Monday, we've got Palantir, Hims and Hers. Palantir, obviously, a crowd favourite. Hims and Hers, revenue machines. And obviously, we've got the kind of retail side of things with realty income. A few names that people like: Uber, Celsius, Fubo, Rivian, as I mentioned, Airbnb, and they've got Big Dog of Caterpillar in the building industry. I'm sure you'll be looking at that one, okay? And on Wednesday, Shopify, Robinhood. Robinhood's one I'm looking at. I've got a key eye on that one. Disney as well. And I'll let you take through the rest of the week. Also, I've not left you much there. But do you want to talk about Shopify briefly? Because I know you've
Yes,
got that
I'm
chart
actually going
lined
to
up
be
too.
covering Shopify as
Yeah.
part one of the chart today. We did miss SMCI Supermicro.
Oh, did
The
we?
big on Tuesday after close. So that's a
Okay.
big one. Um, I will, from my
Yeah.
perspective, I'll also be looking at Datadog on Thursday before open, and then I think that's pretty much it from my side. Then the trade desk that's on that's on my watch list
I
on
see
Thursday.
Sound. I see SoundHound has made it to the top of the list now after its kind of pump in recent months due to the Nvidia kind of news around that. So that'd be interesting to see what they do because that stock has been all over the place. I don't know if you've seen that one, okay? But yeah, no, plenty to look forward to this week on the earnings. I will definitely be looking at it, not that closely because obviously it'll be our way, but yeah, I'll definitely be keeping a keen eye on what's going on. Should we move on to the next slide, okay?
Yeah, let's do this.
Oh, here we have our first chart. So this is SPY on the daily chart. We can see that the volume is kind of peaking up nicely just above Kaye's head. You can see it there. Um, well done, Kaye. It's producing the SPY volume as always. But what we can see on the chart here is you've got the circles, which are the gaps. This is obviously a gap that has been filled now because we've just come down here on Friday. Big gap open, gap down, sorry, and obviously kind of played around throughout the day. But I pointed out this line here of kind of 531.62. Not my normal kind of accuracy there, but that kind of rough area. Seems as though we've got a bit of support here, maybe from the resistance back in kind of mid-May, but it's not the most solid support line, so I won't be playing a trade around that. That's for sure. A few key areas. Obviously, we've got the gold line at the top here, 562. That's the gap fill to the top. Whether we get there with the sentiment we're showing at the moment anytime soon is probably yet to be seen and probably not too likely. But you never know. This market is very, very emotional, and obviously going down to 506 is that's the other gap as well. That looks more likely at the moment, given the kind of sentiment and the direction the stock market is going. It's in a little bit of limbo. Would you agree there, Kay? Because it's kind of in between the kind of moving averages, and it doesn't really know what it's doing at the moment.
That is correct, and I also believe that at 525, I'm looking. There's a lot of volume shelf at 525, so we may see a decent, buying in at that level. You have support, and then even at I would say 518 to 525, that's a good volume shelf area. So I would expect the buyers to step in. Unless we get some kind of a massive geopolitical news that completely shatters the market or surprises. But I think those levels are pretty spot on from a volume show standpoint.
So one of the theories I had this week, and I'm just going to spring this on you now, is obviously inflation has kind of shown good things over the last kind of 5 to 6 months or so. And obviously the market is kind of forward looking, generally kind of 6 months to 12 months. Are we seeing possible kind of downturn within the markets now to anticipate what could be happening in 6 months? Because we've had the inflation story, we've had that kind of success story in inverted commas, of course. But do we have recession worries, that kind of thing, geopolitical worries? Is that what you're kind of seeing in the market now, perhaps, or is that just
I
a blip?
I think so because recession worries have started to creep in, and again, I mean, we know that the rate cut might happen in September. Question is going to be one rate cut or two rate cuts or three rate cuts? Also, on the politics side, which we generally don't discuss on the channel, but we still have to take that into account as
Mm.
that is one part of the factor, is that so Donald Trump had a pretty good lead, and the market was pricing for him to win. Now, with the change in the nominee on the Democrat side, the polls are at least showing right now. Depends on how you trust the polls or not. That's a different case, but it's showing that the race is going to become tighter and tighter as the weeks progress. So there could be a shift that if the Democrats will retain power, we may see a sell off, because a lot of buying that happened was taking Trump as going to be the winner, and a lot of trades happened that way. That's one another massive news on the geopolitical side is, we saw what happened recently in Iran. That I don't see that as a major spot, but again, if USA gets pulled into the conflict and something major breaks out, we may see a sudden knee-jerk reaction in the market. Not that any wars are going to pull the stock market down, but there's always a knee-jerk reaction to news. But I think it's more like a domestic election news that I would say will be the bigger key, and then September that we are looking forward for the anticipated rate cut.
Yeah, no, I agree. I think they're good words. I think it's useful for people to know and take on board. We've got Sebastian here. BCT lost 10% since market close on Friday. Apple will fall Monday. The put to call ratio is in favour of the long, but the charts are still showing weakness. Kind of what we mentioned here on the charts for SPY. So, yeah, another person who thinks possible downside. Let's move on to the QQQs before we spend too much time on SPY. And this one looks a little bit worse, in my opinion. We've got the kind of trend line that goes way back. I forget where to. I think it's from November of last year, thereabouts. It looks like we're just kind of basically trying to break that. Now, I need another confirmation, another kind of red day, or even just a flat day for a confirmation of a break to the downside here. Typically, I would normally associate that with like a 5-minute chart or 15-minute chart, but it can also work with a daily chart as well. In which case, I'll be looking basically for a drop down to this kind of gap fill, which kind of coincides with the 200 moving average as well, which is around about 430. I don't know why I didn't draw a line there. Perhaps I should do that next time. But obviously, volume increasing, and that's kind of all I've got to really say. That kind of 430 level is what I've got my eyes on for potential bounce. Do you see something perhaps happening now? Is there a little bit of bounce happening now? What are your thoughts? Because we've got lots of
So
yeah.
there's decent buying at the 440 457 level on the volume perspective. uh, that's a pretty big volume shelf. And also, if you draw, there is a support coming at 450. Again, that might be a psychological level as well. So I'll definitely be watching this level here, because this is a key level, and considering the last week is more like again, uncertainty in the market. They want to see how things pan out. So we may want to see if it can consolidate at these levels before breaking to the upside or the downside. But if there is a downside movement, the volume kind of starts breaking down until we get to the levels of like 420, which is also 428, which is also closer to the 200-day moving average.
Awesome. Yeah, I think it's an interesting spot, like you said. And just another thing to kind of add on to that, this trend line obviously isn't the be all and end all. I mean, lots of people have different trend lines. It could be slightly lower, so it could still actually just be bouncing off the bottom of the trend line, but it just isn't for me at this point in time. So that's another thing to take into account. My trend lines aren't God trend lines, unfortunately. I wish they were sometimes. All right, moving on. Let's go into one of our first charts. It's Microsoft. So another big player in the market. So I've got two kind of scenarios that have happened, potentially happening here. Obviously, a reversion back up to this kind of resistance point, which is the trend line. Not the most solid trend line, but it's the one that I kind of made with the most touches, with the most kind of buys off of the line, bar this area here, of course. So if we can get above that and retest it and make another move higher, back up to the 50 moving average, which is this white line kind of flowing through. The reason I say that is because we've got a bit of a buying action off of the 200 moving average, and I like that. I want the next 2 days to be green, or in this case on the chart here, white. So that would be good to see if we get a bit more of a bounce on Microsoft. They had, I mean, you probably looked at the earnings more than I did, but it looks like they had okay earnings. Pretty good. What are your thoughts on the earnings there, Kaye? Do you have any thoughts?
That's a let me just make sure that I'm not getting my stocks mixed up, because I was mostly focused on Amazon. But let me just
Yeah,
quickly double check. Yeah, they did beat the earnings,
yeah.
but I think the issue with them was Yeah, I don't know what the issue is. I'm really sorry about the. I did not check the fundamentals on this one, but I think from the technical standpoint that I'm looking at is this is a key level for Microsoft because this is where the biggest volume shelf is, and also it's closing down to its 200-day moving average. And if you see that the 20-day moving average is curling and it's getting very close to the 50-day moving average. So that could also signify a downturn in Microsoft because Microsoft has been running up from for a while now, honestly, at this point in time. So some healthy correction on Microsoft may be on the cards.
Yeah, potentially. I think it'd be interesting to see what it looks like on the weekly chart as well. It's a shame I didn't bring that one up. But I thought this spot was interesting around the kind of 200 moving average. You can see the buyers there, perhaps the kind of long-term investors adding to their positions. So it'd be interesting to see if we get a bit of a bounce. The last to note here is the RSI, which of course you can't see until I do this. The RSI is quite low. It's around about 32, I think it is. So that's another point.
I think one other thing that you might want to keep in mind from a put to call ratio, it's pretty similar as what was last week. It was 0.78, it's 0.71, so it's slightly bullish. But I think depends on how the market takes the Apple news. It might also impact other
Yeah,
tech stocks.
that's true. Yeah, good point. We'll see tomorrow, won't we? Right. That's it for Microsoft. Anything else to add for Microsoft?
Nope, pretty good.
I hope you're taking down these names, Kaye, because here
All
to
of them
learn
in
is
my
put
list.
down
Yep, we'll go one
5
by one.
tickers.
We'll go one by one.
We love them all. Keep coming. Keep them coming. Up next, we have Robinhood. They are reporting earnings on Wednesday after close. So I'm looking forward to that. At the moment, not looking great. The last 2 weeks, like many other stocks, of course, have travelled downwards. This one in particularly has, big percentages. So we're kind of within this range. I've got this range between 1650 and 2050. And I like this range to kind of trade within, perhaps calm down a little bit. But obviously with earnings, it will kind of blow either up or down either way, of course. But I kind of want it to kind of settle around 1650. And that's where my entry point would be for a little bit of an upside back up to kind of 2050. And the reason I've got that kind of red line coming through as well, it's a 200 moving average, sorry. And obviously the RSI is really, really low, which I will just make available for you to see. And that's even lower than Microsoft's. It's about 30, 31. So that's again really, really low point. So do we get a little bit of a temporary bounce in Robinhood? Was yet to be seen, of course. Any thoughts on Robinhood? Do you follow
Yeah.
Robinhood?
So keep in mind that the estimated move on Robinhood, the estimated move is about 12%, but generally Robinhood is around between 8 and 9% is the actual move on the stock. So let's say if you average it out and make it 10%, it's what, $16 right now? 17. So about a $7, $70, $80 move either up or down. That's what you're looking at.
Yeah, exactly right. So yeah, it's important to pay attention to that, but obviously it doesn't always happen to that exact
And
numbers, of course.
and of course, the put to call ratio, considering it's a retail favorite or at least one of the retail favorites, is 0.34, so highly bullish, with the implied volatility of 139, actually 140%.
Oh,
So a lot of premiums. Premiums will be high on this one.
indeed. So one to look forward to. I'll be keeping an eye on that on Wednesday evening, despite the holiday.
And you'll be amazed that this was Hood was part of the request, so we did cover Hood. So
Okay, we can tick that one off. I don't know who requested that, but yeah, we have done that now. Awesome. That's it from me. You can catch me on X, Sean Trades, also on YouTube at Sean Trades, and Substack Sean Trades as well. YouTube, I've got some things planned for September. I'm looking forward to going into those kind of plans and going hard, keeping people updated, keeping people educated, and just having a laugh, live trading, and that kind of thing. So obviously go subscribe to me over there. We will now move on to Kaye's charts. What you got first, Kaye?
well, before we jump onto the charts, I really want to thank everybody on who has joined. We have almost 1,000 people watching on X. So thank you, Wolf, for supporting our platform and giving us the platform to present here. And then let's kick it off with which is one? This is Amazon, right?
Amazon, yeah.
Okay. So, from an Amazon standpoint, what is very interesting is that Amazon did broke the trend line. It is down 16% from its all-time high. So you can pretty much read that. Key is we are below the 200-day moving average. this little gap that I have, you can say if there was a little bit of a gap fill. I generally don't consider the VIX as a gap fill, but we could see an additional downtrend until we see that gap fill happening. And then, of course, then you'll have this gap down, which will eventually be filled at some point in time once the market turns. Highly dependent. So I was reading an article on Amazon. It was very, very interesting. So I forget the name of the writer. It's on Seeking Alpha. The writer said Amazon used to be a retail giant with a computing business or the cloud business as a secondary unit. Now it seems like Amazon has become a primary cloud computing business with a very expensive retail business which is not performing. Now retail in general, regardless of, you can look at any retail companies, they are struggling. Amazon in particular has been hit hard by the Chinese companies like Temu, and I think forget the other one, which is they provide a lot of cheap products. And Amazon seems to have moving into that space where you can buy cheap products from Amazon as well. But again, these things, they take some time for the plan to set in motion, so you might not see those results right away in the second quarter. It may take a couple quarters before Amazon will bounce again. I think if you are an Amazon investor, trader, I think this is a good opportunity. From a trading standpoint, I'll wait for the consolidation phase to happen. But from an investor standpoint, these are good points when every time for a Max 7 or a good quality company, it drops below 200 the moving average, I tend to add into my portfolio. So, which I did, by the way, as well for when it happened. Not saying it can't go down more, but if it goes down more, I'll be looking at this level of, I would say, about the 154 area, which is on the map. Yeah, where we see some support. And then between 144 and 154 is another support level coming in. So, see how it plays out. Thoughts?
Yeah, I like the. I mean, let's touch on your first point, the wick coming down to close this gap. I'm surprised that doesn't make you think that the gap has been filled, because in my mind that has been filled, because the price action has come down to that level, and then obviously bounced off of it, which is obviously tends to be where the gap fill, buyers come in and then
Yeah.
it moves the stock up. So yeah, we'll see what happens there. But I do like the price action on Friday, despite it being obviously very negative. I did have a bottoming candle, which means obviously the buyers came in at some point. Judging how the market ended, that's not too bad. Another thing to note is the RSI, which I don't think you touched on there, but the RSI is also very, very low. So it's down to 30. For a stock like this, I mean, anywhere below 30 is a good thing to kind of add for the long term. And in my opinion, you did allude to it a minute ago. So that'd be interesting to see if that happens. But Amazon's one for me. I like the future for Amazon. And obviously, this gap fill up here would be a good target to have at some point in the future. But yeah, like you said, you touched on one of those points. I've got nothing else to really add from that. So well covered, Kaye.
All right, let's move on to the next one.
A couple of comments. We've got love you guys from Sebastian. Enjoyed days off in Greece. Thank you very much. And obviously, good morning from Risk and Rewards. So
Good
hello,
morning.
hello. Thank you for joining. Right, next stock for Kaye.
So next one is, as you might notice that I'm trying to keep the chart as clean as possible.
Yeah, I like it.
So trying not to have too many lines so that it can make sense. Now, Shopify is going to report earnings this week, and if you notice, look at this chart. There are so many gaps on this chart, whether it's gap up or gap down at every point. So let me look at the Shopify's implied move. Give me 1 second. So Shopify's implied move is about 14% actual implied move. So you're looking at what, a $54 stock. So you're looking at about, maybe $7 up down. So if it goes down, we can expect the stock to pretty much do the gap fill for the bottom. And 45 has been the lowest the stock has been since last year, November. So it's pretty much coming up in the last, I would say, 8, 9, about 10 months. So you could see the new lows for Shopify. Now, considering how Amazon, generally, they're both in the same field, same area, same industry. So if Amazon had a pretty bad week or pretty bad earnings, if Shopify is in the similar space, I could see this gap definitely filling out post earnings. But then, as you can see, that there are gaps above as well. So that is where I would be very interested. If we see a gap down, I might be looking into a position for the upside breakout. When that happens, we will be able to take advantage because those gaps will get filled at some point in time.
So you're talking about this gap at the bottom here filling. Let me get my mouse out.
Yeah. So if
This
we
one
see a bad
filling and
earnings,
entering
exactly.
then.
Yeah.
Entering
So
there.
if we see a bad earning, this gap should be filled with the $7 implied move, $7-8 implied move, and that's where I might look to start a position, looking for an upside breakout, which will have another couple gap ups that they can fill for. And it could be a big long term, not but mid term swing trading. I would say
Yeah.
not a day trading, but swing trading. Yeah.
Yeah, I wouldn't say it's a day trade, of course. Of course, you need a few sessions to kind
Yeah.
of get the momentum going. And then perhaps another kind of buy setup, so a higher low would be good kind of moving forward with that swing trade. But definitely starting a position there, I mean, sounds good in my opinion. And that's around 48, 49, as you can see there, but obviously draw that on your own charts and do your own research before considering any sort of trades. The only thing I saw was potentially an RSI divergence on the bottom here, so I'll have a look. So this is obviously a very low RSI, coupled with the stock price just up here, and the stock price has actually come lower, but the RSI is held up above
30. Yeah.
this previous low. It's not the best RSI divergence. I like it to be a little bit more difference, a little bit more variance there. But that is something I look for in charts, and that could be a potential turning point for Shopify. Sorry, was it Spotify? But yeah,
One thing I just want to add, if you notice on the chart, even if you see a gap up that fills the gap above that little last wick that you see, the last bar you see, the problem is that you have 3 moving averages acting as a resistance for the stock. So I don't expect the stock to go and fill the first gap that we see at the top of the chart. That is going to be a little bit, it may take a couple months, even Q4, reporting, or maybe Q1 next year, where we'll see those gaps getting filled. So this trade might be a little bit long-term trade to get in, where you might see some massive gains. But again, see how it plays out. Wait for the earnings on this one from my side.
awesome. Yeah. Fantastic. So it'll be interesting to see what happens with Shopify. I've written it down on my list now because I never really had Shopify on my watch lists. But now you have caught my attention with all these gaps. So we've got another one up here as well. So yeah, we'll see what happens there for the upside.
Yeah, I was running out of space on the chart to add more gaps, but you can find me on X. I do post my trade updates often. So Avi, I did post it about my SOFI, so I'm pretty sure you might have checked it out. So definitely check that out. On YouTube, I've been kind of slow lately because I have other things going on, but I'll continue to add more videos throughout this month in August. A couple more stock analysis videos. I think a couple of my folks requested specifically for stocks that are into the power area and energy sector. So I'll make more videos on that, and then I'll see if I can get something writing as well for Substack.
Sweet. Good stuff. Really like your content, especially post earnings content. I really like it. The way you break it down, etc., is nice and easy for people to take on board. Right. So I'll say thank you once again for all the viewers that joined. I don't know how many we're up to now. Okay, what are we up to now?
We are 1.4 today.
Awesome. Fantastic. Thank you all for joining. Obviously, thanks again for Wolf to letting us share the platform. Make sure you subscribe on YouTube, by the way. We never actually really plugged that, and we're almost at 300. So, yeah, tell your friends, tell your family that we do charts. Not that, not many of my friends like charts, so it's probably a useless kind of broadcast. Anyway, charts.
All right, ready? So the first one, let's touch BTC Bitcoin because it fell almost 11% plus.
Yeah, I think it's continuing to go down now as we speak, isn't it? We had a comment not so long ago about that.
Yeah, the problem with Bitcoin is like it's trading 24/7. So whatever we put on our screen, it's always like old news by that time.
You can see the wedge that I previously drawn. It kind of broke out of there, which is a nice setup, all the way up to kind of the previous resistance, but it didn't quite reach there. So that would have been a failed trade in my book. I didn't take it, of course, but that would have been a failed trade. We've got lots of rejection off at this level, and it continues to bleed out. Where do we find support? Maybe this area where we've had a bit of buying there. Let's put a line in there.
Yeah, I
See
mean,
where these
definitely
do.
you'll want to watch that area, right? Wherever that support is coming in. And if that breaks, then we'll see where the next support comes in. Because I don't think then the next support comes in until you pretty much right over here on the screen, you have that's where the support comes in. I can't see it. It's so small.
Well, this one,
Yeah, exactly. Yeah.
50,000 ish.
So then that becomes a more psychological level as well for BTC. Um, I mean, I wouldn't be surprised if you can see a big decline in BTC and then it gaps up again. I don't
Yeah,
trade BTC, so I'm not that familiar with the trend how it moves.
it's a big weekly candle. But if you look at the trend line that goes back from October of last year, it's still well within that trend line. And obviously, we know that, at least in my playbook, you need more than one candle to break a trend. So we'd need the following week to be, again, a red one or even just a flat one for that break to be confirmed, if you see what I mean. But yeah, that's Bitcoin.
Let me also, I know that there are other requests, but let me just looking at the Bitcoin miners, specifically Mara. Mara is down below its 200-day moving average, actually. So it's at trading at 1719. That's a pretty much kind of aligning with how, it moves, just like Bitcoin,
Uh,
right? Yeah.
Broken the previous channel and the 200 moving average. It's in no man's land. Doesn't know what it's doing. Doesn't look good, does it? We've got
It doesn't
support
look
down
good.
here at 1460, so that'll be my level of next. Where
I,
I'll
I
be looking.
listen. I'm watching this now. It's back on my watch list again because I love trading Mara specifically for selling options here. It's like a free money right there.
And you've got 3 points of support there as well, highlighted. Um, Sebastian says terrible earnings on Thursday. Did they have earnings on Thursday then?
Most likely, man. I mean, honestly,
Oh
there's
yeah, they
been
did.
so many
They-
earnings that like
oh
it's hard
yeah.
to track nowadays.
You can't really see it because it's behind us, but it's a double
Yeah,
miss.
8-1. So they missed their EPS by 79 cents and they missed their revenue by 100 no, 11.93 million. So it's pretty bad. And but I shouldn't be, nobody should be surprised that they missed their EPS and earnings because their history is pretty bad. They do miss earnings a lot.
Interesting.
So
So we
all
could
right.
see 1460 at some point. Interesting.
Yeah,
I'll
I
be writing
mean,
that one down
listen,
as well.
definitely follow on the X because if you're interested in Mara, I do generally trade Mara often. I will post once I take that trade. All right, let's
Lovely.
move to Intel, the star of the week.
Yeah. Star? I'm not too sure about the star.
That's a meteor.
Yeah.
So, you want me to go with this one
Yeah.
first?
Do you want me to do the daily or the weekly? Because the daily doesn't look.
Oh man, you can keep it. It's just gonna be a rant here rather than.
Okay, go ahead. I'll let you
So
fire
I
away.
think the CEO needs to be fired. Number one, I just don't see. I mean, I looked at their fundamentals a little bit. They are far away from making any dent into the GPU market. They're losing money in their core business of CPU as well. It's like it's really not performing. And when it comes to fabrication, man, it's gonna take years before it can even show any performance improvement or it can even deliver any value. I know they made money a little bit here and there, but it's in few $1 million, and this company is $100+ billion company. So I don't know how the CEO is even keeping his job at this point of time. Now, if you're looking to buy Intel, I would recommend to wait and see how the trend plays out because I wouldn't be surprised if Intel actually pulls back below $20 as well at this point in time.
Yeah. Are you done? Are you done with your rant now?
Yeah, I'm done with my rant.
Yeah. Cool. So below 20 is obviously down here in this kind of shaded box. I've just kind of drawn that temporarily. But on a weekly time frame, you can see big support there is around 25, and it's just absolutely obliterated that, gone straight through it. So now we're looking for a next point. You mentioned before the stream around about 15, so we're going way back now. But yeah, you can see that's 20. That's where we are now. Perhaps I know you probably can't see this, viewers,
Yeah,
but
yeah, I can see it now. Yeah,
I
yeah,
would
yeah.
I would adjust it for other people in a minute. So yeah, where are we now? 21.48. So there's lots
2011.
of support around about 1950-ish.
But that takes you back to 2011-12 era, 12
Yeah,
years
that's what I
back.
mean. So I've never been so confident in supports from way back in the past. I like current price action if it's happened in the last kind of 3 to 4, even a couple of years to be fair. But stuff that's happened about a decade away is not really for me. What was going on there? Is that you?
Uh, it's Alex. I don't know how it got enabled. Hold on. One second.
Yeah, so we're looking at support around about kind of $20 or so, and then below that, we're kind of looking about 17 and then 14. But Intel theoretically shouldn't move that much, but we can see it can move that much because it has just done that this week. That is an ugly candle, really ugly candle. I'm not a buyer, that's for sure. Anyway,
Not a
we
buyer.
move on.
I mean, I won't touch this. Okay, let's move on to the next one. Next is Snap.
Sebastian's bringing up all the red candles.
Yes. What's going on, Sebastian?
Yeah, where's the positivity,
Oh
Sebastian?
my God, this one is even uglier.
Yeah, that doesn't
No
look good.
less, man. No less. What's going on with Snap earning? Let me see.
So this is the weekly candle. We are at basically at trendline support now, just by looking at the corner of my eye there. So you can see that we're at it. So if we're going to break that, we're going to go even lower. Perhaps
And the
down to
RSI is
50.
15 right now. So
Is it really? Wow.
yeah.
So I'm just playing with the chart here. RSI on the weekly is even about 31. Let's go to the daily.
So one thing that I have learned over the course of trading and investing and looking at charts is like when you have these massive gap ups or gap downs, um, generally give it a couple days for the market to digest before taking any positions, whether
Yeah,
for long or short.
100%.
Because one candle is not enough to tell you the trend. Now, of course, this gap down we could see. Now, actually, somebody did ask for CrowdStrike, and when we touch that, I'll tell you exactly. I'll come back to this point, and you'll see why I mentioned that. So let it play out. Let it shake it out a little bit. See how Snap does. I mean, is Snap even like people do even use Snap nowadays? But who
I think
knows?
the kids
Maybe
do.
I'm too
Yeah.
old for that.
Yeah, we don't use it anymore. But
Yeah.
well, I never really did, to be fair.
No, I used to use it back like 10 years back, but not anymore. Anyways, let's move on. So we covered
Just
Amazon.
on on the
Go ahead.
subject of on gaps and how they feel, I just want to bring up Rivian because that's a fine example of what failed. Ignore all the lines on the chart. We had a big gap down on earnings. If you wait a few days, maybe a couple of weeks to see how it kind of turns out, you can kind of see eventually, stocks do if it's good momentum in stock, good theory, etc. And you like the stock, you know, it can happen. It can fail. Anyway, that's enough
So
from me.
Sebastian says his kids love the app. I'm pretty sure, man. Kids. That's why I said I'm probably too old for the app. Okay. Let's move on to the next one. LMT. Never heard of this one. Oh, it's
I think we
Lockheed
have
Martin.
Lockheed
Ah,
Martin, yeah.
yes, yes. I have heard of it. I just didn't know the ticker.
It's done pretty well, this one. This one is a request from Windy City, which is a great name. Right.
Wow.
RSI is very high, and this is the daily as well, so that we could potentially be seeing a little bit of a pullback just from an RSI point of view, because it's at 90 at the moment. No, actually 92. You can't see that on the screen, but you can actually a little bit just above Kaye's head there. But 92 on the RSI, is that, in your experience, is that pretty high? I'm pretty sure you would say
Yeah,
yes.
yeah, of course. I mean, so if you have a position, then just enjoy the ride.
Yeah.
If you have trades, call options open, enjoy the ride, maybe take some profit off the table. But if you plan to open a position, this is not a time to open positions. You just let it ride. Enjoy if you were in a position, but this is not a point you would want to take an entry because the risk to reward it's not there.
The only thing I would look for is a potential RSI divergence, but in a negative fashion. So you've got, for example, we'll get out a highlighter, wherever that is. A peak here, obviously, and then a peak here, but you're looking for RSI to be actually higher, which is not going to be that easy. Yeah, I mean, that's, yeah. Ignore everything I just said there. I mean, that's very unlikely, but it is possible.
Yeah, but the chances of seeing a pullback is higher than you seeing another 10% going up from here.
Yeah.
Okay, so we covered Hood. Next up is Visa.
So they bounced back after earnings, haven't they? Because we've got the earnings here, again, just above your head there. Pretty good earnings.
And my
Only
head is
bounced
everywhere
back up.
today. What's going on?
Yeah. Maybe we should switch over and become above my head. Right, we're just trying to find.
So they did miss on the revenue. They reported earning on 7/23, so it's been a while now. They missed both on their EPS was in line, but the gap EPS there was a miss, and then revenue was a miss as well.
I think what I'd be looking for here is actually a really good setup, in my opinion, because I like this setup. That's what I look for. Is a trend line breakout, like a breakout trade, Kaye, and this is what I've been looking for. If I get the path out, a break above this trend line, come up, retest, and then obviously make a move higher to probably not all-time highs, but that most recent high you can see over here on the left side.
Let me ask you this question then.
Yeah.
Would you wait for the breakout above the 200-day? Because that seems like a resistance to me. It failed 3 times.
I would wait for the breakout above all of this. So I'm looking at this level here of about 269, sorry, almost 270. Let's say 270. A break above 270, come back down, probably retest 270 because that'll be where all the moving averages are at that point. And it may not come all the way back down to the trend line because sometimes stocks do that. But yeah, an entry around here, I'll probably start accumulating a position and then obviously hold it for the long term. It's a swing trade, it's not a day trade in my head. And then coming back up to kind of 290-ish, 280. It's not the biggest percentages in the world, but obviously if you're holding a bigger position, then you, in theory, have kind of more time.
Yeah, and if you are into options and you like to sell covered calls, I would wait for the breakout to happen before you sell covered calls, so that you can get the maximum premium and also be able to prevent losing your shares. Next up is CMG. It's Chipotle Mexican Grill, which has caught my attention. Funny story about that quickly. So my nephew started investing as well, and then the other day he asked me, "Hey, should I invest in CMG?" I'm like, "Yeah, go for it." So he started his position in CMG too.
So yeah, I mean, with this one, I've never really traded it or anything, or know much about it. Obviously, it's an American company. I mean, I know what they do, of course.
So I can help you with that one. So basically, this is a restaurant chain, and they sell burritos.
So I know what they do. Yeah, no, I've seen.
And there's some controversy going on, but I don't think that's going to be a big deal. The controversy is basically they are not giving enough portion. So their CEO has been coming and clarifying on various channels. No, we give the right portion, and we even give more portion if the customer asks. All that good stuff happening. But I think most recently, because they have had that split. Every time you have a split, you can look at NVDA as an example. You can look at an SMCI. You can look at all the splits that have happened. It gives you a good data point to understand that after the split happens, there's the exuberance, the run up that has happened because of the split announcement kind of starts to subside, and then it takes a little while for the stock to consolidate and then have a direction in place. I think the company in general, Chipotle Mexican Grill, if you were buying before the split happened, it's a pretty strong business here. I mean, fundamentally they are pretty solid.
No, that's good to know. I think on a technical basis, we are kind of a bit of a resistance here. A classic kind of retest of, I mean, that's kind of off of the 20 move average here, but it's now retesting the 200 move average, which typically tends to be a little bit more solid, I guess, as a support resistance line. A quick comment from Sports and Bets here. We've got, do you think the market continues its downturn and to see upside in the coming week? I would say look back at our earlier conversation around the SPY QQQ charts. You can go back and watch that on our YouTube channel, obviously Trading Triangle. We did discuss it in fair detail, I think, over SPY QQQ. So go ahead and check that out. Should we move on to the next chart?
Yeah. Next up is Celsius.
Let's have a look. This one, I think, has been beaten up a lot. And you can see on the screen already, so I'm just going to take off of this one. this is the trade I took a little while ago, and you can see this is the importance of setting a stop loss. Let me get rid of a couple of lines so you can kind of see it in a little bit more detail. The importance of setting a stop loss, because if I had held on to this stock, I would be down a further. Yes, it was a losing trade, and that's what happens when you trade. You lose trades. That's okay, but it would be down a further 27% if I didn't have a stop loss, and that's basically that's account gone territory, depending on what kind of leverage you're using, of course. But yeah, that's kind of a little point I wanted to bring up immediately. Any thoughts on this chart? I'll just clear up some lines here so you can actually see it.
Yep. Actually, we have a gap. We have a gap to fill, and that gap starts from. Hold on, let me get there. It starts from 39.56 all the way into 36.07,
Okay.
and this gap up that happened, that was back in May of 2023. So
that you can see on the chart now, that kind of shaded area, that's the gap Kaye's talking about. And we see that we're not too far away from that, about 20% or so. So that's a key level. I think I'll be writing that one down. Lots of hype around Celsius. It's just a drink, isn't it? Is that right?
it's a drink, and it's a drink that is available everywhere, and a lot of places it's at the top shelf, which is like the prime estate of I guess retail business. So I would definitely be watching this gap here.
No, yeah, definitely. That's what I'll be looking forward to.
Next up is Palantir and then HIMS, which are both reporting earnings. So whichever you want to take first.
We'll do HIMS. They're reporting earnings tomorrow night. Absolute revenue machines. I was going to try and get up a chart to show the revenue. So I'll see if I can do that. If you want to talk to the chart just for a second while I get that up, and I'll just drag it over and show people.
Yeah. So the funny part about HIMS was it was not on my radar until one of the community members actually brought it up, and I covered how to run a wheel strategy using HIMS as an option. And when I made that video, the HIMS was around the $14 mark. And then after I made that video, a couple days, maybe a week or two later, we had this massive run up on HIMS. And interestingly, now I'm seeing, looking it back, I'm like, oh, it's coming back down to 1758.
Yeah.
So
So on the screen, you can see what we've got here for HIMS. And let me just get rid of the actual text there for Celsius. We've got subscriptions higher, net orders higher, average order value higher, revenue, absolutely insane growth here for revenue. Net income positive for the last 2 quarters. It'd be interesting to see if that happens again, obviously for HIMS. Cash flow positive. So, it's all pointing in the right direction. And the shares, they haven't diluted anything anytime soon, but why would they? They don't need to at this current time, at least. So, yeah, I mean, the graphs are going from bottom left to top right, and that's what we like to see in companies, especially in the growth sector. So that'll be another thing to kind of look out for tomorrow, whether those are going to continue growing. But from a chart perspective, yeah, I see 1680 as the support, as you can see on the screen there, the white line, sorry. That's it, really. It's what I've got to cover. Just wanted to just go through the revenue aspects of the company, and obviously that big old support line here might even make it thicker.
And they don't report earnings until end of October, which is 10/24. So you still have a lot of time left to see how it plays out. Of course, part of the broader market you'll have to watch. Next up is Palantir.
Palantir also showing earnings tomorrow, isn't it?
Yes.
And they've had, again, really good earnings. There's so many lines on this chart. I do apologise. They've had really good earnings in the last 2 years, really, actually, to be honest with you. That's reflected in the stock price. It's gone from about $7, I think it was, until what it is now, which is about 25-ish. So, yeah, I mean, again, I wouldn't be trading this until post-earnings. I have traded this before going into earnings, and I've had some luck, and I've also had some bad luck. But that's what happens with a binary event, as you mentioned before. You either lose money or you make money. It's a complete gamble. So my kind of strategy now is to kind of let the earnings play out and kind of trade after that. I guess that's kind of what you do as well, Kaye.
Yeah, 100%. And I think I've been a little bit more conservative this earnings season, that I am not taking pre-earnings play. I think apart from SOFI, I have not taken any earnings play. And honestly, I think we talked about this, that was a couple months back, and I asked you guys a question, is like, where should we look into opening a long-term position for Palantir? I mean, listen, guys, I mean, if it's pretty far away from that gap, but if we start to see pullback in the market, we could see Palantir going and filling that gap, because that gap will be filled at some point in time, whether it's this quarter, next quarter, 1 year from now, you could see that pullback.
There's potential there, isn't there?
Yeah, the
But like
potential is always there.
on the other side of that, if we get good earnings, tends to move quite well. I mean, we've seen it move 25%. Sometimes we've seen it move to 10%. I don't know what the average move is this time.
Oh, I can tell you. Hold on 1 second.
Yeah, but we could see it get back above this kind of 2750 line. That's kind of what I would like to see if that is the case. We've colour that green for now so you can see that. But if it gets above that and holds it, then obviously that's the kind of where the entry point would be. Keep a nice tight stop loss.
16%.
16% average move. Okay.
Yeah.
And then hopefully we can crack this kind of $30 mark. Amit has been talking about $30 quite a lot on his channel over the last few months. So maybe we can crack it. Who knows? We'll see tomorrow night. Probably won't be tomorrow night. This goes 30%, but that's, yeah, we'll see.
All right, moving on. Next is SOFI.
SOFI. I'll let you talk to this one since you've had some recent trades on this one.
Yeah, absolutely. So interestingly, for SOFI, I have this range of $6 to $7. This is where I mostly open my trades at about $7. I tend to let it run and then pretty much sell it out and then just rinse and repeat as we go through. Post earnings, I mean, I feel like this is just a trend for SoFi until it breaks. Post earnings, stock goes up, sometimes goes up a lot, sometimes not as much, and then you see a pullback. Stock has been trading under 200-day moving average for I don't know how many months now. It's been since March. I think the stock has been below 200-day moving average, and I think this is perfect for traders because you can just keep taking advantage of these pullbacks and just wait for the next run up above 7, and then get out of your position and rinse and repeat. So if you ask me what at this point where could be the next level, I would say the next volume shelf definitely comes around the 634 area. There you see a lot of bars. That could be an entry point.
Yeah, it's interesting. I mean, that's the point where I've got the cursor here already. That's at 634, as you just mentioned. But I like this level here around about 664, just because of the recent support in these areas. Again, if it does break that, and of course down to kind of 630, it goes. But what I really want to see is a higher low. I just had it on the screen a minute ago, but if it sets like a higher low somewhere around about here, and then we're looking at, sorry, this is going to be really messy, but like a bounce like that. That would be ideal, kind of a momentum, a bit more of a recovery, a bit of a normalized recovery, perhaps the opposite of what we see on this side of the screen, but the other way around. That would be something to look forward to. But yeah, the higher low is really what I've been looking here for SoFi, and that would be good for my long-term position because I like adding on the dips, as I'm sure you do as well.
Yeah, and then if you are generally, I do options trading on SoFi, so I can share a couple levels. So if you are looking for an option, want to sell options on SoFi, a 6.5 strike expiring August 30th would give you about 33 cents. And if you go September 6th, it gives you 36. So I think 30th August, which is 26 days, it's about 4 weeks, I would say, of expiration, gives you about 33 cents. So depending on how many contracts you open, you can multiply 33 by that. So pretty good. The premiums were up. The percentage change was up about 120%. We have decent open interest. We have about 3,400 contracts open at that level and a delta of 40. So delta is a little bit higher. But again, 6.5 is a good entry point because you are looking for a 6.5 to a 7 jump and basically have it expire worthless. So that is both on a swing trade as well as on the options trade.
Awesome.
Okay, next up is CrowdStrike.
I think we need to do a little bit of a rapid fire round. We've got about 10 minutes left. So,
all right, so we have CrowdStrike, NVIDIA, Palo Alto, Net.
Right, okay, right. Let's start with CrowdStrike first. That's a Fibonacci I've drawn from way back in the past. Looks like it's kind of still playing around that Fibonacci. And it's just filled a gap, actually. Let me just get rid of that so you can see a bit clearer. My charting today has not been as good as it normally is. But we see a gap about there-ish. Looks like we've just filled it. So it could be interesting to see if we get a bit of a bounce here, maybe back up to this kind of 238 line that I've drawn. Thereabouts, maybe 240, let's call it. That's not bad percentage-wise, actually. If you could hold that as a day trade, would you potentially options trade that?
No, I would not. I would not sell options on this one yet. It's not. It's. I need to see a little bit more evidence that it has held a position. Right now, it still is in a downward trend. So I would wait for selling options in this one because I don't want to be holding a bag. Because if the stock dips below, I will end up being assigned the stock at a higher level, and then I have seen this trend play out a lot. So I tend to be a little bit more conservative with stocks, especially with this massive gap down. You want it to, unless you're buying the share outright and hoping for the upside, that's a different kind of trading. But if you're doing selling options, then you would want to see it trading in a range before you can rinse and repeat, sell options, and then buy the stock, sell covered calls, and so on and so forth.
No, I think that's an interesting point because what I was alluding to was obviously trading shares because you could enter here and have a really tight stop loss around about here, which is percentage-wise not a lot. But obviously your risk to reward is probably about 2-3 to 1 from a share point of view. But obviously, like you said, with options, it's better to have a bit of a range before you start entering different levels. One thing to add here as well, just before we move off this, I know we said quick fire round, but it's the RSI. Where am I?
Crazy, 1593.
It is down to 15, which is very, very low on any stock, let alone one that's been in the news a lot recently. So we'll see what happens there. One to look on to.
So fun story on CrowdStrike is my nephew added it with the first drop, and I asked him, why did you add it on the first drop? And he did not have an answer. All right, moving on.
It still doesn't, I imagine.
So I saw one of the audience asked a question, can we play Palo Alto and Net because of CrowdStrike? So let's cover, because they are similar. So PANW, and then we'll cover Net, and then NVDA, and we'll wrap it up after that.
I think there is an ETF as well. I forget what it's called. I think it's LOCK.
LOCK?
Okay. LOCK, that's another way to play these kind of digital security stocks, should we say. So this is PANW. This is Nancy Pelosi's second favorite stock, isn't it?
I don't know. I don't follow her.
Yeah, I'm pretty sure she likes Palo Alto.
So, I mean, Palo Alto is a beast when it comes to the cybersecurity space, right? This company is what? It's a $98 billion company. CrowdStrike was, I think, $75 or $78 billion company. So
it's bigger.
Yeah, this is bigger, yes.
So what I'm seeing here on the chart straight away is obviously just a little bit of a bounce off the 200 moving average. That's what I like to see.
But it's not enough yet. It's because the last candle is still an indecisive candle.
Yeah, no, that's just what I was about to say. You took the words out of my mouth. That's good because we've got a kind of similar sort of mindset there. Maybe getting above this kind of trend line with the resulting move back up to this 360 line, which is a gap fill, obviously way back from February. So that is a potential trade there. I'll just draw that out very, very quickly, and then we'll move on to the next stock. So looking to break that, come back down, retest it, and then move up to 360.
Yeah, and you have the earning coming up in 4 weeks, 829. So that you gotta keep that into account as well. Good news is that the up revisions are 32 as opposed to down, which is 5. So the market is expecting the price to go up, and they'll have a better revision. So
I've got earnings here on the 19th. You've got the 29th, did you say?
Yeah, that's what I see on Seeking Alpha. Oh, sorry. Okay. No, I'm wrong. I take it back. Yes, you're absolutely. It's on 816 actually. And the EPS revision is 22 upside as opposed to 12 downside. I was looking at CrowdStrike,
Oh, there you go. Anyway,
next up is NET, which is in the similar space. This is Cloudflare.
See, I like this more just because of the setup. I mean, you've actually got a bit of a trend line from all the way back here. I don't know, just draw a rough one like that. You can see lots of touches there. If we break that, expect a kind of big move above that, in my opinion, of course. But on top of that, we'll get rid of that for a second. We've got a bit of a bull flag, which is what we draw like this. And you've got obviously the stock kind of traveling through here, the price action. This is a line I've drawn in the path for some reason. Perhaps it's a little bit of support, but really getting out this bull flag in a positive fashion is what I'd like to see. A bit similar to what we saw with PANW come back down for a retest somewhere, and obviously make a move higher. Percentages on this will be a bit more fruitful than PANW, so perhaps you could play both, but obviously with a small allocation to both, so it's kind of hedging your kind of profits there. But again, obviously trade safe, keep your stop losses definitely thereabouts. Anyway, I'm rambling. What are your thoughts on
No,
car?
I think you hit the nail on the head, Sean, on this one. So nothing much to add from my perspective. Pretty
Awesome.
spot on. Last
Fantastic.
is the big one, NVIDIA.
We do like to end on a big one, don't we, sometimes? So, yeah. This is, I mean, I thought we had a comment around that 100, didn't we? Let me try and find that.
Yeah, I think it was, I'll tell you, it's my, the gap that I have listed is between 96.47, 96.62 going all the way to 101.28. That's the long-term buy zone for me, at least, on the gap.
It
Yep.
looked like it almost tried to get there as well on Friday,
Yeah.
in early trading, of course, and then it really rebounded off that kind of level of 101.50, that's what I can see on the chart here. Whether that can continue is yet to be seen. Obviously, we've got the Apple news that news has already happened, but the Apple stock price to see if it brings down the Qs, in which case it may bring down NVIDIA with it. I know they're not directly correlated, but they're both big tech stocks, so you know.
So to answer the question of if I'm pronouncing it right, Kuma. Apologies if I mispronounce it. If you are investing for a long term, it does not matter whether you buy at 100, 105, or 110. From 5 years from now, it wouldn't matter much. If you're trading, yes, it matters. So, assuming you are asking this question from an investing standpoint, then I would say it doesn't matter. You can open a position, and every time, I think this is a rule when you invest. So if you have $10,000 to invest, you don't drop every single dollar in one go. You break it out into tranches, maybe 3, 4, 5, 6 tranches, whatever you feel like. Tranches is nothing but allocation of a certain amount of capital to buy a small position, and then just rinse and repeat until you have allocated your entire money against that equity or stock. So
Exactly, and I think your point here on the gap as well, just to go back to the chart, I do like this resistance has been hit like 3 times, maybe 4 times if you count that. So that gap fell down to 96, let's say. That is one I'll be looking for, just like you. That's I'm going to write it down. I think that might be it now, Kaye, isn't it?
that's it. I think, yeah, that's a good way to end the stream today.
Awesome. Wow. What are your plans for the week? Because I know what mine are, and that is going to Greece.
So have a safe flight to Greece. And thank you to all our folks who have joined today. Sebastian, thank you. Appreciate all the requests. Matthew, we were not able to cover Apple, but we will definitely cover it next time. So join early, put your requests early. We try to get to all the requests as soon as possible. Here to learn a lot of requests as well. So appreciate it. Stay safe in the trading standpoint, and keep an eye on SPY QQQ and how that's trending. Gives you a lot more direction on your particular individual stocks as well.
I think you said it very well. Nice closing statements there. Only thing I would add is make sure you subscribe to the YouTube channel. We're almost at 300. So go ahead and go over there. Obviously, the Trading Triangle on YouTube. Hit subscribe, and we really, really appreciate the support. Yeah, I think that's about it. Thank you very much, Wolf, as well. Let me use the platform. And again, be trade safe. Don't be silly. Don't do things you don't normally do. And it's very volatile times. It's very emotional out there. It's easy to get caught up in all of it. So yeah, just be safe out there, guys. And with that, we'll end this week. Obviously, like we said before, we're going to be off next week because obviously I am away. And then we'll be back the week after at the same time of 6 p.m. UK and 1 p.m. East Coast. Sorry. Yeah. Thank you very much.